Question 2. And for some of you, this may have been the first question that you chose to do in the mock exam. It's ethics. Of course it's ethics. And we've got a group of companies that generates electricity. We've got a year end of 31st December, but we've not got a lot of basic information. So the first thing that I want to do is to open up the requirement. The first thing that I want to do is to read that requirement, but actually control copy paste that into my Word response area so that I minimize the number of windows that I have open at any one time. And although we don't have to do the overall exam questions in order, you can do question 2 first. That's quite a clever strategy for many of you. I think it's important that you do A and B and C in order for question 2, although it's worth having a skim read of the requirements. Explain the accounting treatment for the contingent consideration and the decommissioning. So we've got some accounting at the beginning and we've got the word and, it breaks it down. Then we've got some sustainability reporting commentary. So we've got 10 marks on accounting, sustainability. And it's the ethics part that is the second half of the question, because we're discussing the ethical issues and we outline actions. So again, that part C has that powerful word and, which breaks down the requirement into 2. And for part C, we've got ethics, we've got professional skills marks. So we'll need to give a complete answer, a considered answer, a structured answer, a professional answer. We should be linking our case and our ethical principles together and we'll pick up those marks. That is going to be my aim. Right, so we've had a very quick look. We know it's about contingent consideration decommissioning. We know it's about sustainability reporting, and we now need to read the exhibit. We have Exhibit 1, and let's therefore open up Exhibit 1. There are no big numbers, there's no pre-populated spreadsheet or even spreadsheet at all in this particular question 2. So here we've got our information. Saint is an ACCA member, recently joined. Her direct manager is Linnea, who's also an ACCA member. That's to do with ethics. That's to do with highlighting the fact that the two people are experts, they're members, they should know their onions, they should know their stuff. Now, it's Linnea who has personally drafted the accounts. And Saint is doing the reviewing, and Saint is the person who's recently joined. This is all going to be very relevant when we look at the ethics scenario. We know the basic business model of the business of Alban is electricity, but they seem to have acquired a new subsidiary. And the new subsidiary has a coal furnace. And before the acquisition, it was basically a wind and solar panel. So there's a diversification going on. I'm getting a little bit lost. What is the requirement of the question of Part A that I'm concentrating on? It is about the contingent consideration. That's what I want to focus on. And it is about the decommissioning costs. And I've got a little paragraph specifically about the contingent consideration. The purchase agreement for buying Fleetville. We are Alban, we are buying Fleetville. It contains an earn-out clause whereby we have deferred, we have additional, we have contingent consideration. But that contingent consideration is only going to be paid if it's successful, if there are future profits, which may or may not take place. Now, the investment in Fleetville, as recorded by the parent company, does not include the contingent consideration. Fact, doesn't include it. Now, the justification that Linnea has made, the justification that the qualified accountant has made, is because it seems improbable that they will achieve the future profits. it seems improbable that that additional consideration will become payable. We are not going to agree with the supposition within the question. It's a 7-mark exercise. We're breaking it down into 3 marks, 3 marks. You've got to be alert to the idea that the default is we disagree. Now, why are we not making a provision? Why should we be making a provision? Because provisions are only recognised if they're probable, but we're on the wrong track here. This is about recording the investment in the sub, and the investment in the sub must be recorded at fair value. And the fair value of the consideration, the fair value of the contingent consideration, can be measured. It can be measured at an expected value. It won't be the full amount, but it can be measured and it must be recognised. Because as a result, both the investment and therefore the goodwill will be understated. Look, I get this. I get that it's tricky. I understand why they've fallen into the trap. And it's to do with the fact that we need the investment in the sub. The investment in the sub has to be recorded at the fair value. Yeah. Now normally, we apply IASSES 37. And probability is a recognition criteria. But that's not applicable here. But what is applicable here is it's group accounts. What is applicable here, what is overriding is that the investment must be at fair value. And it's a level 3 fair value if you want to get into it. Because it's an estimate, must be at fair value. And look, it's a 7-mark exercise. There's 2 parts to it, A and B. And I'm comfortable that I've earned 3 marks here because I've made 3 valid points. I don't quite know why it's in bold. It looks a little bit aggressive in bold. So let me take it out of bold. So I'm using white space. I'm trying to make friends with the marker. And I'm now reading, and I'm now going to think about the decommissioning. Now, in the individual accounts, Fleetville, who is the subsidiary, has made no provision for the cost of decommissioning the coal furnaces. Decommissioning means cleaning up. Decommissioning means restoration. Decommissioning means at the end of the asset's life, in order to put the asset out of its use, money is spent cleaning it, disassembling it, whatever. And coal furnaces are dirty. They will need to be environmentally sorted out. And Linnea has agreed because there is no legal obligation. Now, this is IASSES 37. But just because you're making a provision, you don't have to have a legal obligation. You can have a constructive obligation. There's an argument that there's no present obligation as well, because they're going to last for another 10 years. What we are told, though, is that Fleetville has decommissioned similar furnaces in the past. And I am going to argue, that the accounting treatment is wrong, that we should be recognising a provision because we have a constructive obligation because of the valid expectation. So, here goes. What do I say? Whilst there is and there is a present obligation, because the furnaces are in use and therefore will have to be decommissioned in the future. So the accounting is to recognise in full. The accounting is to recognise in full. To measure a present value, to reflect the time value of money, to capitalize, and then to depreciate and run amortized cost. And that sentence can be slightly tidied up, if you want to. So if you want to have the opportunity of editing it slightly, I am not that obsessed with the spelling. But again, what I am obsessed with is breaking things down, using subheadings, and have I got 7 out of 7? Probably not. But I've got 6. More than happy, JMO, just move on. All right. So we've now got to think about the impact of the acquisition of Fleetville on the draft sustainability report. Now, we've got to think about the acquisition of Fleetville on the draft sustainability report of Alban. And Alban's business model, if you remember, the business model of the group prior to the acquisition of Fleetville was the operation of wind and solar farms to generate green electricity. Then we acquire a subsidiary, Fleetville, which is dirty, because the subsidiary that we're acquiring of Fleetville operates a coal furnace. So from a sustainability reporting point of view, there's a lot going on because we've got a radical change in our business model. But when we read the information here, although we are told that the sustainability report for last year, X4 is last year. Remember, we're dealing with an X5 scenario. The draft sustainability report is largely based on last year's content and does not reflect the acquisition of Fleetville, does not reflect the fact that we are now burning fossil fuel, and that has an impact in terms of carbon emissions. So that's the context. And surely there's a very common sense piece of low-hanging fruit to say the current draft of the sustainability report is all wrong. So that to me is quite a straightforward thing to say. That's going to get you 1 mark. Now, when we think about these reports, we think about governance, strategy, risks, and metrics. Those are the 4 pillars. Well, for me, if I've got another 2 marks to earn, I'm going to talk about risks. There will be new risks to identify. And the other one that occurred to me out of governance, strategy, risks, and metrics is metrics. We've got to come up with some new measures. And for 3 marks, I'm happy that we're saying 3 things. We're discussing the impact of the acquisition of Fleetville on the draft sustainability report. The sustainability report in its current form is not fit for purpose. How can we make it fit for purpose? How can we discuss it? How can we make it better? I definitely think the risks and the metrics are the 2 things that I'm highlighting on. This is the accounting aspect. This is the scene setting. We've got accounting errors that have been made. We've got sustainability reports which have not been done correctly. And we are now having to discuss the ethical issues. We are now having to discuss the ethical issues and outline the actions. So there are 2 aspects here, the ethical issues and the actions. Now, the actions are the actions that are going to be taken by Saint. Okay. And this is I'm not going to say traditional, but this is one type of ethical question where you've got some accounting situation. So it's not really about bullying. It's not really about nepotism. It's not really about organizational culture. It is a little bit more about financial reporting. Now, what I want to do is to understand that the professional marks will be a byproduct of my structure and my editing and my commitment. One of the things that I want to do to start with is to pick up on the fact that everybody is an ACCA member. We're going to be ultimately helping Saint, who is the new person, the junior person. So they have a slightly tricky situation because they're going to have to call out their boss for what they've done. But I'll come on to that in a minute. So just got a small little scene setter there, just establishing the fact that, you know, they're both ACCA members. I think that's relevant. I'm hoping that's picking me up a mark. Now, what are the ethical issues involved? You could structure it around the pillars, or you could structure it around the case. I don't particularly mind which you do. I normally favour it by kind of aspects of the question. And the aspect of the question here that we're talking about is the accounting errors, the accounting errors, made by Linnea. Or if you want to think about it in terms of the ethical pillars, I think what we're really talking about here is competence. And let's call it out. You know, it's unacceptable to make these kind of mistakes. Yeah, it's unacceptable. Yeah, it is unethical. Okay, they're draft, they're being reviewed. It is unethical as competence, is a key pillar, is a key ethical pillar. So, I'm being a little bit harsh. It's unethical. Now, what I would normally now do is to consider whether this has been not incompetence, but whether this has been deliberate. Now, in which case, that would be a much more serious breach. But I don't see any conflict. I don't see any advantage. I don't see any profit-related bonuses. I don't see any background. I don't see any reason to suggest that. So I'm not going to deal with it. I'm addressing it, but I'm not going to allege it. But there's no evidence of why this would be the case. There's no evidence that it is there. So it is that is the ethical issue to my mind. That is the ethical issue. The ethical issue is that Linnea is not very good at her job. That she's made mistake after mistake after mistake. Mistake on the investment, mistake on the provision, and mistake on the sustainability report. So what do you do if you're Saint? What do you do if you're this new person that has just arrived? Well, you've got to act really carefully. You've got to tread really carefully. Yeah, they don't want to be rude. Maybe they're on probation. You know, this is a seriously delicate matter in the way that they approach the matter. They need to keep records. Yeah, they need to keep records of meetings. Yeah, they need to be polite. Yeah, they need to be polite. What do they need to do? Yeah, they need to suggest improvements. They need to suggest the corrections necessary. So maybe what could be done is, prepare the journals, e.g. draft the journals, draft the new and the new sustainability report, so that rather than just criticize, you're actually saying, well, actually this is what could be done better. This is how it could be done better. That would be a positive way to do it. Now, if this is ignored, what happens if this is ignored? If if Linnea refuses to take on board her need for CPD, CPD, continuing professional development. Well, that's an action. I've jumped ahead slightly. Not only have you got to recommend they do it, but we need to suggest to Linnea, this is the idea, isn't it, about being able to edit your own work. You can get ahead and kind of go back. Need to suggest training. Training to update knowledge. Okay, definitely. Now, if that's ignored and refuses her need for CPD, continuing professional development, and refuses to change the accounts, then you've got a real dilemma. Then you've got a proper ethical dilemma, and refuses to change the accounts. Then we need to pause. Then we need to think. then we need to take advice and report the matter, above our head. Report the matter to somebody appropriate, to another senior colleague. I don't think we say, oh, and therefore we resign. I don't see that I would then necessarily go out and get formal legal advice either. I think this is something that we, could hopefully deal with on an internal basis. So look, am I getting 10 out of 10? I'm not claiming to get 10 out of 10. I'm claiming here to be answering the question. There is a really good, better than I have produced here model answer. But if you're in the exam, your back is against the wall, time pressure, this is the approach that you need to be taking. You need to be reading the question, you need to be answering the question, you need to be breaking it down, you need to be keeping it simple, you need to be challenging the marker the whole time. Give me a mark for this. Give me a mark for this. Give me a mark for this. Think about your presentation, use the white space, make a point, move on. Make a point, move on. You can go back, you can edit, but don't be obsessed with spelling. All right? Fantastic. There are 3 other questions in this mock. Make sure that you've had a go at them all. Make sure that you understand the debriefs. Make sure you have a look at those model answers. All right? Onwards and upwards.